Hello and welcome back to the Note. Well, there's life in the dead cat yet. Today we've had a classic dead cat bounce in the S&P 500, up some 4% for the day, buying both at the beginning and perhaps more importantly at the end. Doesn't really prove very much. You'd expect a bounce after a sell-off on the scale of what we've seen recently. Obviously it's much better for confidence than the horrible day we had on Tuesday. Also, there is some news to support the stock market. The New York Fed chairman has been speaking and he says in as many words that he thinks that the case for a September rate rise is weaker than it was a few weeks ago. Whether or not that's good economic policy, that's exactly what the stock market wanted to hear. Now, one of the interesting things about this turbulence in the stock market is that it isn't reflected in other asset classes. If you take a look, for example, at gold, obviously, normally, when things are bad for stocks, you would expect people to make a dive for gold. Well, that hasn't happened. You did see gold prices rise noticeably in the run-up to the extreme turmoil in stocks, but gold price is actually down quite noticeably over the last few days. You could make a similar point about bonds. Their prices have also gone down in the last few days. Why? Possibly because people really were expecting this correction in stocks, thought that it was overdue, and therefore they were ready for it. If you take a look at earnings on the S&P 500, you can see that momentum in earnings per share, so this includes incidentally any effect that you get from share buybacks to boost earnings per share, a dubious practice, but it still is at this point unable to push those earnings per share up any further. With momentum having dropped off like this, plainly we were ready for some kind of a correction, and even those I've spoken to today who are bullish for the long term say that that call is contingent on a recovery in earnings. So, in terms of whether we can avoid a protracted bear market here, look at earnings. They're very important.